Now to Dom Chu. He has today's ETF Edge for us. Hi, Dom.
All right, so Scott, Treasury yields are slipping today after President Trump delayed his steep EU tariffs until the month of July. That comes after 30-year yields just last week jumped to the highest level since the fall of 2023. So how should investors approach this type of volatility in an area of the market that's generally known for its stability, I guess relative stability? So joining me now is Joanna Gallegos, the co-founder and COO of BondBloxx. Joanna, you've spent a career in the fixed income markets and then developing exchange-traded products, exchange-traded fund products. I wonder if you could take us through what the bond market volatility has told you about the dynamic that's developing in our broader market overall.
Well, even despite all the volatility in April, I think that bond ETFs have been working, and they've been working really hard for your portfolio. In fact, most categories in fixed income year to date are in positive returns and status. And so what you really need to be thinking about right now is you need to be thinking about income and how it's offsetting all the volatility we've experienced. But you need to be precise, and we like a few important categories there.
What types of categories are you looking towards if you were out there looking for that reliable, relatively reliable bond market income?
Yeah, I think there's a lot of strength in the bond markets, especially in the corporate markets, because the economy is showing resiliency, as we've been talking about all morning on CNBC. But essentially, there's three areas. We like short treasuries because they're yielding over 4%, and that's a great place for you to access that yield. We like short corporates, and that's because if you reduce the interest rate in your corporate exposure, you can reach out for more yield in your portfolio and income that offsets volatility. And then we really like private credit. It delivers only 5% of the vol of S&P 500, 30% of the vol of ag, but it's yielding over 7% and even 8% from a yield to maturity perspective. So that's a great place to start for the second half.
All right, this is perfect. This is just a snippet, by the way. We got a lot more on the credit and rate markets overall coming up at cnbc.com/ETF Edge. Joanna will be joined by Todd Sohn, the technical strategist over at Strategic Securities, to have a big roundtable conversation about the bond market. Scott, tune into the online show. We'll see you later on.